So markets are bipolar at the moment. And I guess what we mean by that is very hard to predict. If we get strong economic data, for example, that we received last week in the US, personal consumption and expenditures, we saw a number that clearly shows that inflation is not fading. In fact, inflation might be a little bit hotter for the month of April than anticipated, perhaps even a little warmer for the month of May as well. So when we get data like that, 4, 5, 6 months ago, the market would have gone down because the market would have anticipated that the Fed would use this data as a reason to raise interest rates again. Today, or last week, I should say, when we received strong data, the market actually rallied. It actually rallied. On a morning where I thought the market might go down, it rallied in the face of strong data. So that tells me that the market right now is considering or looking at this idea of a recession coming more so than inflation. I believe the market thinks that inflation is on the downward swing and that the issue of inflation, even though it's still a problem for the central banks, it's not the number one problem any longer. The idea of a possible mild recession, or even for some, maybe a bit more of a deeper recession, is more on the minds of investors than the inflation battle. And so when we see strong data, once upon a time, it would cause the market to go down. Today, strong data actually causes the market to rally because that tells us that no, a recession is not around the corner, that a hard landing, as we've been calling it for a while now, is not around the corner, that the market is very resilient. And the fact that we have so many people working, such a low unemployment rate, is definitely helping. And that's probably the number one indicator, or the number one, I guess, economic indicator that we all watch to see the health of the economy. So markets being bipolar, well, maybe that's not such a bad thing right now. Maybe good news is actually good news, no longer good news being bad news, which was the case for, I would say, 12 or 13 months of the last 12 or 13 months. Economic data that was good was looked at as bad, and today good data is being looked at as good. So I think going forward, when we get strong data, I think the market will rally. Now, I think the market is telling us that we are going to see better numbers ahead. Market looks 6 to 12 months in advance, or ahead, I should say, and what it's seeing right now is an economy that, even though we may see a recession, it will be mild, and the market should bounce back or move out of that mild recession very quickly. And so any indications of strong economic data would be looked upon by the market as favorable.